Hello everyone and welcome to my morning report analysis videos on Thursday 4th of October with me, Rich Market Analyst at Hantec Markets. We had a significant gain on the dollar yesterday. That came on the back of a couple of things really. We had the ISM non-manufacturing data which came out at incredible 61.6 level, and that sort of really did put the dollar in the dollar bulls in the driving seat. But also then you had comments from FOMC Chair Powell, who suggested that the neutral rate on interest rates was a long way away. So subsequently the dollar shot higher along with yields. Look at that 10-year yield moving significantly higher, adding around about 10 basis points on the day into the close, and then it's had another sort of 6-7 basis points today. So it really has helped to steepen the yield curve, with the 2-10 spread pushing out 33 basis points. That's back to levels of sort of end of July really, but seems to be sort of on an upward trajectory for now, and that has played out through a stronger dollar. Look at that strong dollar move we've seen through that 95.6 level. I spoke about that in my daily in my webinars that suggested that was a level that could be where the dollar might start to fall over, but subsequently we've seen yields spiking higher on these comments from Powell, and that certainly helped to change the outlook on the dollar. You've seen euro dollar breaking key levels, you've seen sterling dollar breaking key levels, you've seen dollar yen moving out to multi-month highs. So they're all sort of are gaining ground on these dollar pairs, with the dollar strengthening on that. Now the flip side of that is that you've had equity markets under pressure. We had S&P 500 and the Dow were both quite strongly higher initially, but failed to close all that much higher, and then subsequently we've seen futures around about 0.6% lower on the S&P 500. European markets are all lower in the back of that. There's a slight outperformance on the DAX. Maybe that's sort of something to do with yesterday's playing catch up. They were on Unity Day yesterday for the for the DAX. Sorry, the DAX is outperforming today for German Unity Day. Yesterday they're playing catch up to a degree there, but certainly CAC and FTSE are quite strongly down now. So yeah, it's all pretty much equity markets negative, and a little bit of gains that have been given back from the dollar today, but I don't think that's anything really significant. I think it's sort of an unwinding move perhaps that may well give you another buying opportunity, because that spike higher on yields was significant and doesn't really look to be stopping on that 10-year or the 2-year. So really strong moves that should help to support the dollar, certainly on yield differentials. I can show you I mean, look at that. Bund yield spread under 10-year treasuries. Look at that yield differential now. So that should help to drive a stronger dollar against the euro at least. So that takes me to my data points today. Not a lot going on. We've got the US factory orders at 3 o'clock. That is the only real bit of data that we need to get too worked up about today, and that's expected to be pretty strong again. 2.1% on the factory orders. My chart of the day is euro sterling. Now what we have seen in recent days is the euro under pressure from Italy, but now obviously, as you can see with those yield spreads pushing down, euro is under pressure against the dollar from the dollar strength as well. So that sort of all adds up to euro coming weaker against sterling. And what we've got is that coming through here on the chart, and what this chart is telling us is that we're testing this 88.50 key level of support. It's a neckline of a potential head and shoulders top, and you sort of zoom that out, you can see that a breakdown below that, pretty much being mid-range, could now start to see the market, if it does close below 88.50 level, start to see a retreat back towards the bottom of the range again. Now that would suggest sterling continuing to make ground against the euro. So in order to do that, you're probably going to need a positive outcome on Brexit. However, what we've got on the euro sterling is the momentum indicators increasingly negative. Look at those MACD lines having bear kissed they're now starting to pull lower. Stochastics, RSI, downside momentum. So as I said, a close below 88.50 reopens the bottom 86.20 up towards 86.85. These old lows of the range come back into play. Initial support, you could argue, 88 figure, really up towards 88.20. And yeah, it certainly looks as though that further downside will be seen if that continues. So you've got the hourly chart, which continues to show, well, that's just reverted, that's annoying. EURGBP. Hourly chart, which continues to show the lower highs and lower lows. 89.20 yesterday's high before sort of turning back lower again. Sort of does still suggest trading underneath all the moving averages, which are falling. Intraday rallies are a chance to sell. Initial resistance around 88.75. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.